Assalamualaikum warahmatullahi wabarakatuh. Today we are going to present Pohkong Holdings Berhad. Our team consists of 4 people. Me, Ainul Mardhiha binti Azhar.
I am Karisma Durar, binti Kamarulzaman.
I'm Nur Athirah binti Kamarudin.
And I am Nur Azhani binti Azaman. Okay, let's start our presentation with Pohkong's company background. Pohkong was established in 1976 with its first outlet in Petaling Jaya. Pohkong continued to be at the forefront of the jewellery industry and enjoys tremendous growth. Being listed on Bursa Malaysia since 2004 has driven Pohkong to even more success since its inception. Today, Pohkong has its own manufacturing facility in Shah Alam and has reached the hundreds outlet in 2011, thus earning its position as Malaysia's largest jewellery retail chain store. Second, meticulous craftsmanship. Pohkong's passion in the business and its dedication in providing fine jewellery of top-notch quality and international standards have always played a pivotal role. As a result, Pohkong jewellery have been created with superior quality and meticulous craftsmanship. Furthermore, let's talk about company's in-house brands. Putting its knowledge and expertise in the jewellery business to good use, Pohkong has created several in-house brands under its belt. For example, Trans, Happy Love, Anggun, and the Art of Auspicious Jewellery. Next, sole distributor for world-renowned international jewellery brands. Besides developing its range of in-house brands, Pohkong is also the sole distributor for world-renowned international jewellery brands such as Schoffel Luxury Pearl from Germany and 2 Italian brands, Luca Carati and Moraglio 1922. Schoffel is a highly respected brand name in the world of culture pearls, renowned for inheriting one of the most beautiful and extravagant pearls with excellent quality. Luca Carati is one of Italy's most prestigious luxury jewelers with expert craftsmanship and invaluable experience in finest material acquisitions. Established in Valenza, Italy since 1922, Moraglio 1922 is a jewellery brand steeped in a timeless tradition and rich heritage to reflect wondrous design that juxtapose colourful precious stones with alluring diamonds. Pohkong also includes retail concept. Pohkong offers a wide range of gold and gemstone jewelleries as there is always something for everyone, from exquisite pieces to simple design, from irresistible collectible to dazzling custom-made works of art for every age, taste and budget. From international brands such as Disney and many more imported jewelleries. For Pohkong Gallery, a luxurious showroom for the distinguished and affluent Pohkong Gallery houses an extensive collection from the world-renowned designers. Next, diamond and gold emanates the charm and elegance of modern women. Lastly, Oro Bianco is the Italian word for white gold. Bianco means white and Oro stands for gold. The white brilliance of white gold and the resplendence of diamond captivate every beholder. Next, we move on to management approach. Factors to consider having segment reporting is the nature of product and service, the nature of production process, type or class of customer, and methods to distribute of products or services. The nature of products or services, Pohkong offers a wide range of gold and gemstone jewellery. Second is Pohkong Holding Berhad's corporate structure is organised along 6 key business activities, which is retail, manufacturing, wholesale and distribution, property and overseas investment, and franchising. Its subsidiaries are organised into an integrated one-stop jewellery business with operations in retailing and manufacturing of gold jewellery and related gold investment products. The retail and manufacturing operations are carried out through Pohkong Jewellers Sdn Bhd, Pohkong Bullion Sdn Bhd, Pohkong Manufacturers Sdn Bhd, and Pohkong Wholesale Sdn Bhd. The nature of production process, Pohkong also committed in delivering the highest standard of customer service to every customer. The services that they provided are customizing, appraisal, cleaning, engraving, polishing, resizing, repair, ear and nose piercing. Type or class of customer. Based on income customers, Pokong focus on mid and high income groups. Method to distribute of products and services. Pokong has 93 retail outlets for customers who prefer to see and feel the quality before they purchase. Pokong actively engage with consumers via social media channels, and Pokong's collection have been made available at the leading e-commerce sites including Lazada and Shopee. Next, we move to type of segment. Business segment, component of an entity that is engaged in providing an individual product or services or a group of related products or services, and that is subject to risk and return that differ from those of other businesses. Pokong is organized into three major business segments. Trading, suppliers and retailers of jewelleries, precious stones, gold ornaments and gold bullions. Manufacturing, manufacturer and dealers of jewelleries, precious stones and gold ornaments. Others for investment holdings. Geographical segment, component of an entity that is engaged in providing an individual product or services within a particular economic environment, and that is subject to risk and return that are different from those of other economic environment. No geographical segment is presented as the company operates principally in Malaysia.
Let's proceed with Chief of Decision Making. For Pokong, CODM is their Board of Directors. The first profile is Datuk Chun Yi Seong, Executive Chairman and Group Managing Director. Datuk Chun Yi Seong was the founder of Pokong Jewellers Sedia Berhad in 1976 when at 22 years. He started a modest jewellery store in Petaling Jaya. Datuk Chun is responsible for the group's overall direction and strategy, marketing and management policies, business expansion and operations. Segments reporting. Measurement of reportable segments. Segment information is prepared in conformity with the accounting policies adopted for preparing and presenting the consolidated financial statements. Transactions between reportable segments are measured on the basis that is similar to those external customers. Segment statements of comprehensive income or profit earned or loss incurred by each segment without allocation of central administrative costs, non-operating investment revenue, finance costs and income tax expense. There are no significant changes from previous financial year in the measurement method used to determine reported segment statements of comprehensive income. All the group's assets are allocated to reportable segments. All the group's liability are allocated to reportable segments. Segments that are related are trading, manufacturing, information technology, utilities and others. Rules to determine which segments need to be reported are aggregate the results of two or more segments if they have similar products, services, processes, customers, distribution methods, and regulatory environments. Report a segment if it has at least 10% of the revenues, 10% of the profit or loss, or 10% of the combined asset of the entity, and if the total revenue of the segments you have selected under the preceding criteria comprise less than 75% of the entity's total revenue, then add more segments until you reach the threshold. 10% of threshold test. In this presentation, 10% threshold test on segment asset of all operating segments of Pokong Berhad is applied. First, calculation segment asset of an operating segment are divided with all combined asset operating segments. For example, manufacturing segment with 136,995,709 asset value are divided by total assets of 2,104,972,344 times with 100%. With this calculation, segments of trading, utilities, information technology and others are more than 10% of combined assets of all operating segments. Therefore, these four segments are reportable. However, manufacturing is not reportable because it does not meet the 10% qualitative threshold test. According to 10% threshold test, 4 out of 5 operating segments are reportable segments. From there, 75% threshold test is performed. Total external revenue of reportable segments must be more or equal to 75% of the entity's total revenue. If it is not met, then find additional operating segments until it meets 75% of entity's total external revenue. As we look at the external revenue, only 3 segments that have external revenue. So we total up the segments which are trading, utilities and information technology. The total external revenue is 1,193,693,990 plus with the inter-segment sales 358,014,356. Then we divide it by the total external revenue of all segments, which is amounting to 1,577,506,986. Advantage and disadvantage of segment reporting. The first advantage is separating profitable segment. As for focus of Pokong Holdings Berhad, they operate in many different type of segment, so it can reveal which area is profitable and which area are drains on the bottom line. Next is analyzing company's performance. It can give managers greater insight into the relative profitability of different parts of the business. Managers use segmented financial statements to help them in the financial analysis process. Lastly is enhance the transparency of financial report. It must report segment externally to external users who are stockholders, creditors and investors. This allows external financial statement users to look at the company the same way as managers can. Next, we move on to the disadvantages of segment reporting. First disadvantages is it could lose competitive advantage. As segmental information disclosure gives details about the company's operating margins, return on assets, growth rates and risk in its different lines of business, they may really reveal the existent weaknesses or opportunities which can be exploited by those competitors and other parties to their own advantage. Second disadvantages is problem of misinterpretations. Segment information might be misleading to the investors and other external users who read it. Operating data by segments are developed for internal management users, and often arbitrary judgments are made by management for developing such segment data. Last one is managerial conservatism. In the absence of some regulatory provisions to disclose segment reports, voluntary disclosures are likely to be perceived by managers to be beneficial only in certain situations. For example, management will do the segment reporting when they believe that the company's attractiveness can be enhanced.
Now, moving on to the next part, it is about MFRS 134 interim reporting that has been applied into Pokong Sdn Bhd. So, interim reporting refers to a requirement by the securities regulator for most publicly held companies to file quarterly or semi-annual information. The intent of this requirement is to provide users of the financial statements with more current information, which often is somewhat abbreviated compared to full annual financial reporting. There are 2 views on how interim financial statements should be prepared, which are by using integral view or discrete view. So by using integral method, interim report is considered to be an integral part of the annual accounting period, such as an annual expenses that may not arise specifically during an interim period nonetheless are accrued within all interim periods based on management's base estimates. This heightened level of accrual usage likely will result in numerous accrual adjustments in subsequent periods to deal with any earlier estimation errors. It also calls for the use of the estimated annual tax rate for all interim periods, since the annual tax rate may vary considerably from the rate in effect during the interim period if the company is subject to graduated tax rates. Meanwhile, under the discrete methodology, each interim period is considered to be a discrete reporting period, and as such is not associated with expenses that may arise during other interim periods of the reporting year. A result of this thinking is that an expense benefiting more than one interim period will be fully recognized in the period incurred rather than be recognized over multiple periods. Therefore, we can see here that Pokong Sdn Bhd is applying the discrete approach, as each interim period is treated as an accounting period distinct from the annual cycle. This has the advantage that the elements of interim financial statements are defined in the same way as for the annual financial statements. We can also see that this is intended to predict and explain the financial position and financial performances for the discrete periods, so the discrete period may be a segment of the annual period. Next what we have here are a few of the accounting policies highlighted used in preparing the interim report. So first we have the MFRS 1 to 3 borrowing costs. So the borrowing cost consists of interest and other costs that the group and the company incurred in connection with the borrowing of funds. Just like how MFRS 1 to 3 states, the borrowing costs are capitalized as part of the qualifying asset if they are directly attributable to the acquisition, construction, or production of that asset. The capitalization commences when the activities to prepare the asset for its intended use or sale are in progress, and the expenditures and borrowing costs are incurred, and it is suspended during extended periods in which the activity's development is interrupted. The capitalization, however, will only take place until the assets are substantially completed for the intended use or sale, and any investment income earned on the temporary investment of specific borrowings pending the expenditure on qualifying assets is deducted from the borrowing cost eligibility for capitalization. With all due respect to the MFRS 1 to 3 borrowing costs, all other borrowing costs are recognized in profit or loss in the period they are incurred. Next is the MFRS 112 income taxes. So income tax expense in profit or loss comprises current and deferred tax. So both are recognized in profit or loss, except to the extent that it relates to a business combination or items recognized directly in equity or other comprehensive income. For current tax, it is the expected taxes payable or receivable on the taxable income or loss for the financial year, using the tax rates that have been enacted or substantively enacted by the end of the reporting period, and any adjustment to tax payable in respect of previous financial years. As for deferred tax, it is recognized using the liability method on temporary differences at the reporting date between the tax basis of assets and liabilities and their carrying amounts in the statements of financial position. What is the type of interim report prepared by Pokong Sdn Bhd? There are online 24/7, monthly, quarterly, special ad hoc report, mid-year budget review, and budget. But precisely we can see that Pokong Sdn Bhd prepared a quarterly interim report, which helps to increase the communication between companies and the public and provide investors with up-to-date information between annual reporting periods. Each quarter has 3 months, which starts from August 2019 to October 2019 for the first quarter, and the last quarter is on May 2020 to July 2020.
Pokong Holdings Berhad's interim report is prepared using quarterly basis for the year ended July 2020, from August 2019 to July 2020 as shown. We will have statement of financial position at the end of the fourth quarter, which is also the end of the financial year. So, the current period will be 31st July 2020, which is from August 2019 to July 2020 equals to 12 months. Whereas for comparative, it is 31st July 2019, which is from August 2018 to July 2019 equals to 12 months. For statement of comprehensive income, a 12 months cumulative report ending 31st July 2020 and a 3-month current interim period report ending 31st July 2020. For comparative, both cumulative and current interim period are 31st July 2019. Lastly, for the statement of changes in equity and statement of cash flow, we will have both a cumulative report for 12 months and comparative statement from the year before. We have proposed 2 adjustments. First adjustment is on property, plant and equipment. On 1st July 2020, Pokong Holdings Berhad acquired a new building amounted to 3,942,246 ringgit. The adjustment will involve property, plant and equipment, and cash and bank balances. On 31st July 2020, the property, plant and equipment was 96,265,000 ringgit. After the adjustment, the property, plant and equipment will be 96,207,246 ringgit, while for the cash and bank balances before the adjustment, the amount was 11,198,000 ringgit, and after the adjustment, cash and bank balances will be 7,000,000 255,754 ringgit. And for the second adjustment is on trade and other payables. During quarter 4, Pokong Holdings Berhad has made a payment for their creditor amounted to 1,320,000 ringgit. The adjustment will involve trade and other payables and once again cash and bank balances. On 31st July 2020, trade and other payables was 10,275,000 ringgit. After the adjustment, trade and other payables will be 8,955,000 ringgit, while for the cash and bank balances, the amount was 7,255,754 ringgit after the last adjustment. For this adjustment, cash and bank balances will be 5,935,754 ringgit. This is the statement of financial position as at 31st July 2020 for Pokong Holdings Berhad before the adjustment, and this is the financial position as at 31st July 2020 after the adjustment. The property, plant and equipment will be 96,207,246 ringgit, and the total of non-current assets is 197,875,246 ringgit. For the current assets, cash and bank balances will be 5,935,754 ringgit. So the total assets is amounted to 793,386,000 ringgit. For equity and liabilities, trade and other payables will be 8,955 ringgit. So the total of equity and liability is amounted to 793,386,000 ringgit. That's all from me and my friend. Thank you.